versus when it's going down. Okay, it dropped 10%. Should I get out now, or should I hope that it's going to rally? Should I hope that it's going to come back up and maybe it'll be only 5% down, and then I'll get out then? It usually does not work that way.
No, there is no hope. You have price levels that you're paying attention to. Did they hit these levels? Did they hold these levels? What did it do? There is no hope. Like, it's got to be. You got to have a plan of attack. And we've mentioned this before. They say the most successful investors on Wall Street are only right 40% of the time, but they're so quick to get out of their bad investments that they don't incur the pain. So they can take that 40% and have that be a winning number, knowing that the 60% of the time that they were wrong, they were so quick to realize that they were wrong, eliminate the risk, let it settle back down, and go back in. And I think that's just a maturity and a skill set that comes in time.
Mm-hmm.
Yeah, and that's, I think, something that is surprising to a lot of people that are amateurs in the space. Whether it's trading cryptocurrencies or any other traditional market, is that if you ask someone who doesn't know, you say, okay, how often do you think you have to be right in order to be profitable? I've asked people before, and usually the answer is anywhere from like 55% to 80%. Brennan, if you were right 80% of the time, I'm sure you would be an extremely rich man. Unbelievably rich.
Yeah, nobody's ever right 80% of the time.
Yeah, and the fact that you can still be very, very profitable, even if you're only right 40% of the time, I think there's a disconnect there that people don't realize. Oh, I only have to be right 2 out of every 5 times, and I can make money. The other side of that is those 3 out of 5 that are bad calls. You need to be able to see that it's a bad call and get out. And that's where amateur traders drop off, is they can't admit that they're wrong. And it's not even so much that they're admitting that they're wrong, it's just they hold on to that hope because they're getting their emotions involved with it. Oh, well, I put $5,000 into this position, so it can't just keep going down, right? I put my money into it. No, the market doesn't care about what you've done. It's going to be doing whatever it's going to do. You need to understand, okay, I'm at 4,500 now. I should probably jump back. I should get out of it and save that.
Depending on the markets you're investing in, whether your philosophy and your is tested, on either in cryptocurrencies could be tested on an hourly basis. In a traditional equity, space, it could be tested on a daily basis, right? Just because you walk into a particular trade with a thought doesn't mean that thought's going to hold over time. It does not. It never holds over time. You have to reevaluate your investment prowess on a regular basis. Am I right? Constant questioning. Am I right? Am I holding this line? Does my initial thought playing out the way I wanted to? If it's not, then reevaluate why it's not playing out that way. So, a lot of just understand you may engage a particular market for, with a thought in mind, but you have to go back and retest that thesis every day.
Mm-hmm.